So today I want to discuss something which a lot of you are probably going to be very interested in. So one of the core problems that we as investors face is that every day, every week, we are bombarded with so many different new ideas. Now these new ideas may come to us from Twitter, or they may come to us from some screener, or they may come to us because of some price action or news or corporate announcements. We come across these ideas, but then we don't really know what is the next thing that we can do, right? So how do you go about analyzing those stocks? How do you go about prioritizing what is interesting and what is not interesting? How do you go about, most importantly, discarding something, that you should not be spending too much time on? So what I want to do today in this video is to give you a broad framework, so to speak, of how can you quickly analyze a stock in about 15 minutes. Now the idea is not obviously you cannot analyze a stock deeply in 10 to 15 minutes, right? That's definitely not the idea. The idea is that how can I size up a stock very quickly to decide whether this is something I want to go deeper into or not, or how can I get to 60 to 70% clarity on that stock, right? 60 to 70% clarity. Why should we do this, right? It's important to ask before we delve into it, why should we do this? Because at the end of the day, the capital that all of us have is limited. The number of stocks that you can have in the portfolio is limited. So you have to at some point be able to prioritize, but at the same time you also want to have a steady stream of ideas coming to you on a periodic basis, which you would want to evaluate to see if there is something interesting. So think of this framework as trying to figure out if a new idea is interesting from your point of view or not, right? So how to get a quick summary of a new idea. So some type of investors may find certain aspects investing, like some of us may focus on the growth aspects of the stock. Some of us may be interested because the stock is it's a beaten down stock or the valuations are low. But having said that, how to quickly get a big picture idea about the stock, what are the right questions to ask, what are the right data points to look at, that is what we'll try to cover in this video. So the framework itself, basically, while I was kind of writing it down and building it out, it just hit me that essentially what we are doing when we are trying to understand a stock is trying to understand the past, which means what has the stock done, or the business done in the past, what is going on right now, right? What exactly is going on over the last 1 or 2 quarters, what exactly is the present, and finally what is going to be the future, right? Obviously we don't know what the future is going to be, so the idea is to see if we can find some clues about the future. So those are the three main parts in which you have to analyze any new stock. What we'll do is we'll take a couple of examples, a couple of very random examples. Obviously none of these are any recommendations. So we'll take a couple of random examples, go through them, and try to understand how I would quickly analyze a new idea that I come across, right? Of course, this video itself may take more than 15 minutes because I'm going to try and explain a little bit about each of the parameters. But having said that, once you're proficient in this type of a thing, in this type of a framework, you can very quickly go through a stock, and it should actually take much less than 15 minutes. So let's kind of get started. So what I'll do is I'll try to share my screen. So yeah, so here we are. So screener is what I use, as I'm sure a lot of you investors also. So let's pick a random stock. Okay, let's say Apollo Hospitals. Okay, so this is the stock that's come on my radar for whatever reason, right? So how do I go about analyzing this stock now, right? So the first thing that I would do when I come on the screener page is I would go to this about section, right? I would go to this about section, and I would be interested primarily in what is this business. The first question I would ask is what is the business. So in a lot of cases you will know what the business is because you would have heard about it, or you would have had some encounter with that particular name. So Apollo Hospitals, we clearly know, is into the business of hospitals. But most importantly, what I want to take away from this particular section, right? If you click on read more, it will give you a much more detailed analysis of the business. So there are two things I'm interested in here. One, like I said, the main thing is the business itself and what does it do in one sentence. And secondly, I would be interested in how is this business segmented, right? So what are the different segments of this business? So is this business operating in just one segment, or there are multiple business segments from which the revenue comes? And the other major thing that I would want to understand is how is the geographical spread of this business, in the sense that is it only a domestic business, or if it is a domestic business, then is it in only a few states, or is it also an international business, right? It's a mix of domestic and international, or some businesses will be primarily completely export. So you want to kind of get that big picture, into your head. So here we look at what the different segments are. So clearly it's healthcare services, which is the hospital's business, and I think they have a digital health and pharmacy division, which makes up about 40%. So this makes up about 52%. So almost 90% is between the actual hospital business as well as the digital health and pharmacy business. And then they have a diagnostic business which makes up about 7 to 8%. So this gives you a big picture view of how does Apollo Hospitals make money, where does the revenue come from, right? So you don't want to get into too much details right now. Like I said, this is like a 20,000 feet view. So you quickly figure out if there's any geographical spread mentioned here. From the looks of it, it looks like this is primarily an India focused business, right? So there is no specific geographical split mentioned here. So that is all you need to know about the business. What does the business do in one line, and understanding of the segments of the business and the geography of the business. So those are the three things I look for whenever I encounter a new business. The immediate next thing I would want to do is I would want to go into this profit and loss part. So I go to this profit and loss part, and I want to understand. The first thing I would do is from the left to right, I would see how has the revenue of this company grown, right? So I can see it was about 4,000 crores in 2014, it became 5,000, 6,000, 7,000, 8,000. So it's been continuously growing. So this looks like a secular growth company, to me. So the pattern of revenue growth is something that I look for. So this is a company that keeps on growing year on year, almost every year, barring one, I think, which was 2021, which can clearly be explained because of COVID, right? So the reason why this would have happened. So the top line is growing consistently. So it's a secular growth company. If it was a commodity company, or if it was some sort of a cyclical company, then you would see a much more zigzag kind of ups and downs in the top line numbers. The more telling thing would actually be the margins. So this is the next thing that I want to focus on. I would focus on how the margin profile is, right? So so 16%, 14%, 11%. So looks like this business on an average is about 12 to 13% OPM business. There have been instances where it has gone to 16%, but broadly speaking, the margin profile is about 12 to 14%, right? So that is what it has been doing in the recent years also. There were periods when it went down to about 10, 11% or so, but presently it seems to be hovering around that 12 to 14% kind of a range. So that is the second thing I'll look in the P&L. The third thing I will look is I'll just click on this sales button here, and that will give me the percentage growth rate. So I am looking at what type of a revenue growth rate has this company generated in the past, right? So from the looks of it, it looks like a 15 to 20% grower to me, right? More tending towards the 15%. So 15, 17, 19. So it's not, I wouldn't categorize this as a very fast growing company. So I think it's grown at a fair pace, right? There was 1 year which was the growth rate was high, but I think that is explained by, I think, a bit of a lumpiness here because of COVID. There was a degrowth in 2021, and I think all of that pent up demand kind of came here. So that is what I understand purely looking at the numbers. So from a revenue growth rate is the next thing that I generally would look for. And then I would come down and I would look at this section very quickly to see again. So it kind of proves, what I thought. So 10-year CAGR is about 15, 16%. 10-year compounded growth rate is also about 15, 16%. The price CAGR is about 20%. The company has generated wealth for the investors. The return on equity itself over the long term hasn't been so high. Off late, the numbers have trended up, but still it is not something out of the world, right? So it's a good company. growing at a fair rate. So all the numbers so far are average to above average. So that is what I would remember. So once I'm done with the P&L, I would next move to the balance sheet. The balance sheet, the thing I would look for first is the size of the balance sheet, right? So this is the number, right? You can see that equity plus liabilities is equal to assets. So this is the number that you want to check. So 20,000 crore balance sheet. Balance sheet 10 years back was about 5,000 crores. So they have grown the balance sheet by about 4 times in the last 10 years. So it's a fairly reasonably sized balance sheet right now. Not super high. I think if you compare this number to maybe a Reliance or some of these larger companies, they will have much higher numbers. But I think 20,000 crores is fairly big, but not very big. The next thing I would look for is the long-term borrowings, right? So this company has a fair amount of debt, right? So it has about, out of the 8,000 crores total borrowing, about 4,000 crores is the long-term borrowing. The other borrowings typically are primarily for running the business. I won't bother too much about it unless there is some specific case. So if you look at the overall debt to equity ratio also, it is quite it's quite a heavily debted company, right? So I think to build hospitals you need a lot of capital. So that is what kind of explains this. So this is a bit of a red flag for me, or a yellow flag at least for me to remember, right? The next thing I would look for is the growth in fixed assets, especially in the recent years. So about an 8,000 crores of fixed assets and capital work in progress has gone up to about 10,000-11,000 crores. So about 25-30% jump in the fixed assets over the last 2-3 years. And the fixed assets are about half of the total balance sheet. So obviously it's a very capex heavy kind of a business. The growth rates are okay, but it's linearly growing in a very steady fashion. There is nothing out of the world happening here. So that is what I would look at. So fixed assets and CWIP, the trend of growth there. The next thing I will move on to is the cash flow, and within the cash flow I am only interested, at least for this activity, is the operating cash flow. Now the way to look at this operating cash flow is to compare this number here 2136, right, which is what it did in March 2025, to compare this number with the PAT plus depreciation. So this is a very quick rule of thumb types, right? So I mean, a lot of you might be chartered accountants, so don't hold me on this, but this is like a quick rule of thumb. Just add the PAT, right, of 1,500 crores and add the depreciation, right, so which is about 2,200 crores in 2025, and against that 2,200 crores you have about 2,100 crores. So it's pretty much matching. It's able to convert a lot of the profit that it is showing into cash flows. The other thing I want to look at in the cash flow statement is the receivables, right? So receivables are about 564 crores, which is about 10-15% of the total profit from operations. It is not that big a deal. It seems to be okay. In a lot of cases, you will see that almost the whole of the profit will be in the receivables, which is a very, very risky scenario, because that means that although the company is publishing a profit in the P&L, but actually it has not received that money in the bank, right? So this receivables number is another factor I would look for in the cash flow statements. So I look for two things here: operating cash flow versus PAT plus depreciation, and the receivables number. So this is what I would look for in the cash flow, right? Other thing you can look for is the trend in the operating cash flow, right? Broadly, you can look at, so most of the years it has had a positive operating cash flow, right? And that number has only grown over the years, which is a very good sign, which means that the company has done a fairly good job. Coming down finally to the ratios part, the number I'm really focused on here is this last number, ROCE. So the ROCE, like I said, just like the ROE, it is decent, but it is not out of the world. So it's about 15 to 17%, which is okay, right? And then I would come to the shareholding pattern. I want to see what the promoter stake is. Has the promoter stake changed in the recent years or recent quarters? That doesn't seem to be the case here. What have the FIIs and DIIs been doing? So nothing much. It seems to be fairly steady. And finally, in the shareholding thing, I would look at, are there any well-known investors in this? In the public, if you click on this public, In case of Apollo Hospital, there seems to be none, but sometimes you will see certain popular investors who are a part of this. Now, the idea is not to emulate, anybody, but just to get a sense of, what type of an investor is, invested in these type of companies. So if I open the DII, similarly, I see a host of mutual funds who are a part of this. And if I open FIIs, I see Government of Singapore, some very marquee names. So I think so. So this kind of completes the one more thing, right? I think what I would also look for in the same shareholding pattern is I would go up and I would look at if there is any pledge. So Apollo Hospitals has about 13% pledged percentage, which is not very high. I think it's fairly okay, but if this number is very high, then that is a pretty big red flag, right? So whatever we have looked, so far, the P&L statement, the balance sheet, the cash flow, the ratios, and the shareholding pattern. So all of these, I would categorize them as primarily, the past, right? So these are the companies which have. This is what the company has done in the past, right? So this basically studying of these trends of the growth rates of the margin profile. So all of these, told me how the company has done in the past. So next we would want to focus on the present, and the best way to do that is go to this quarterly tab, and what you would want to do is you want to immediately click this, and again look at what has been the growth rate in the recent quarters, right? So we saw that the long term growth rates are about 15%. It seems like the quarterly growth rates are also in the same range, right? So I would want to, so because this helps you sometimes if the company is changing the growth trajectory, right? So if the growth trajectory earlier was 15%, and suddenly you start seeing this company grow at 25-30%, something is happening, and you've got a data point to kind of go and dig deeper, right? But in this case it looks like it's 15%, for the quarter also, right? The other thing I would look for in the quarterly numbers is whether the recent quarterly numbers are the highest ever that the company has done, at least in the last 12 quarters, right? So it looks like the case in Apollo Hospitals, whereby this number 5842 is the highest, which means that the company, at least fundamentally, is kind of in an all-time high kind of a territory. Similarly, I would look at the operating profit to see if the company is, the operating profits are in an all-time high territory, which also seems to be the case in case of Apollo Hospital. So the operating profit is more important than the numbers below, because the numbers below can be played around with, but revenue and operating profit generally are fairly clean numbers. And the other thing I would look for in the quarterly results is basically the seasonality, right? So I want to see if March is the strongest quarter, June is the weakest quarter, any such seasonality like that. In this case, that really doesn't seem to be the reason, which also makes sense, because hospitals pretty much are 365-day phenomena. So I don't see a lot of seasonality here. So that's something you will have to check, depending upon what the company is. Then you have a quick check of the tax rate. It seems to be in order, nothing very high or nothing very low, right? And finally, the tricky part, right? So valuations, right? How do you look at the current valuations? So I won't go too much into the details here, because like I explained in my earlier video, the PE ratio, right? There are different ways to kind of look at the valuations and look at the PE ratios. But in this case, right? But what if you just look at the last quarter PE, right? And if you look at the if you multiply this by 4, right, this is what it is likely to do over the next 1 year. So that's 120, right? And 120 times the current price is about, I think the forward P is shown as 65, right? So 65 times is what the valuation is purely on a PE basis. But there is a bit of a catch here. I think companies like Apollo Hospital, which are very capex heavy, right? You might have to evaluate them on a cash flow basis also, right? So if you look at the cash flow numbers, so it's about 2,200 crores, right? If I look at the latest numbers, right? So PAT is about 441, depreciation is about 600 crores. So let's say the company is doing, 441 plus 200. So that's about 650 crores of cash flow per quarter. I think that will translate into about 2,500 crores of total cash flow for the year, when you look at it from that vantage point, I think this company is about 40-45 times cash flow, which is not that bad, but obviously it's not cheap, right? So I think it's a fairly well discovered company, and it's growing at a at a fair, not a very high rate, about 15%, but likely to continue to do that for the next many years, right? So now we have we have a sense of the present, right? What is this company doing right now, which in this case is not very different from the past. It's just maintaining that trend growth rate. Now we try to go into the future, right? So how do you figure out what the future is all about? So the way to do that is to go into this section called as documents. And there are two or three documents here that will give you clues about the future. The first one obviously is the con call transcript, and then there is this notes section, which is a summary of the con call transcripts which generates, and then there is a presentation. So in each of these, right, documents are something that you should ideally go into detail, because any summary will not really give you the sometimes the most important things are hidden in a particular sentence or a line that the management will say. So there is no running away from the fact that if you want to really understand the business, then you'll have to read these con calls and PPTs in totality. But for our purpose right now, because we are kind of trying to do a quick check on the company. So what you can do is you can go to this notes and focus primarily on anything that talks about the future guidance, right? So typically you will find this towards the end of this notes section. Yeah, maybe somewhere here, management tone and outlook, right? So it looks like the management has not given any growth guidance, but management expects EBITDA expansion at a consolidated level, driven by healthco and margin maintenance and healthcare services. So what you can understand very quickly is that according to the management, the margins are likely to remain stable. Management is confident of sustaining growth trajectory in FY26 and beyond, citing strong fundamentals. So I think from the looks of it, what I can conclude is that a similar growth rate is likely to continue. Of course, if you want to dig into the details, then you'll have to really go into the transcript of the con call and really you study that completely. So having said that, so what you're looking for here is basically some flavor on the guidance given by the management, guidance with respect to revenue, with respect to margins, or with respect to profitability, order book, capex. Any of these elements is what you would want to look for in the notes. The other thing that I can advise you is that in the transcript section, right, even if you don't read the entire thing, right, if I can just show you this. Now, I would say at least read the management commentary part. Right? Even if you skip the analyst Q&A, I think just going through the the management commentary, like what Mrs. Sunita Reddy is talking about, they will basically give you the overall view of how the business is shaping up. What's likely to happen, what has been happening, what's likely to happen over the next few quarters. So they will give you their view. So even if you don't read that entire thing, I would say at least read what the CEO is saying, what the founder is saying, what the CFO is saying, and if you don't have time, then you can skip the analyst Q&A part. But like I said, it's best if you read the whole thing if you really want to get into some stock deeply. So that is what I think that kind of completes our overall analysis. So we looked at the past, we looked at the present, and we looked at how we can find clues about the future. One final thing that I would look at is the price action, right? The price action also gives us a sense of what really is happening right now. So it's more part of the present bucket, but let me. So this is the chart of Apollo Hospitals. If you can zoom out a bit, you will see that this has been a pretty steady wealth creator over the long term, and presently also the stock is near its all-time highs as well as the 52-week highs. The long-term price trend has been fairly robust. So generally I like to look at the weekly charts. The daily charts are a bit too noisy for an investor. They are more useful for a trader who are playing more of the short term. But I think investors, I think weekly chart is kind of a sweet spot, right? Because daily is too noisy, monthly is too late. weekly is somewhere in the middle. So after a fairly decent consolidation that lasted from November 24 to August, almost an year, the stock seems to be breaking out, and wanting to go to the next level. So I don't really know what will happen, but the price action looks promising. So that's the input that you have to kind of take away and put it into your overall thesis, right? So that was one complete example of how how you should analyze a stock. Maybe we can do quickly. We can do another example. So let me pick up another stock. Let's pick Avanti Feeds, completely different business. So what I'll do again, we will follow the same methodology that we did. So first thing, I will come here to the right. I want to understand the business. Yeah. So I want to understand the business. What is it the business into? So they're basically into shrimp feed manufacturing. They're also into shrimp processing and export, and they have hatchery and pet care. Okay, so it looks like primarily 80% is shrimp feed manufacturing, right? Shrimp processing is about 20%. So I think most of the business is basically these two things. Seems like geographically they are primarily present in Andhra Pradesh in terms of their manufacturing capacity. Do we have any information about exports or domestic? Is something you will have to check. Market share of about 50% in the domestic feed business, and supplies. Okay, so it looks like okay, exporting of frozen shrimp to global markets. So basically, I think a lot of this feed is sold both in India and abroad, and the shrimp is processed and exported abroad, right? So I think most of the business is the shrimp feed manufacturing. So the focus would be to give it to the farmers who kind of cultivate this shrimp, right? So I think the quick understanding of the business is two main segments: shrimp feed manufacturing as well as shrimp processing and export. Market share mostly in the in the Indian markets as far as the shrimp feed is concerned. Maybe a little bit of exports also of the shrimp feed, but processing looks like it's 100% exports. So right now I'm assuming that I don't know anything about this business, right? That is what I'm assuming and kind of looking at this. Of course, I have studied this business, but here, like I said, we want to get a quick check on what information can I get from this quantitative data that is available on Screener, right? So we've understood a bit about the business. You've understood the segments and the geography a bit. The next thing that we do is we go to the P&L. Like I said, we look at the trend of the top line growth. We look at what this company has done. So 1,700, 2,600. So steadily growing revenues, just like Apollo Hospital. Let me look at the margin profile. The margin profile 10, 11, 12, 13. There was a 20 here, and again back to 12, 11, 11, 6. So I think the company's margins are fairly stable, but there have been years where they have really, taken a beating, right? So 11 became 6, 8, 9, almost half, right? So it's a bit of a tricky business in terms of the margin profile. The margin profile is fluctuating, so that is something I'll want to keep in my mind. Let me look at the revenue growth rate now. So 74.56, very high revenue growth rate, and then the growth rate has completely tapered down. And the last few years, the company has done almost nothing, right? So the growth rates are very much in the low single digits, right? Which is not a great thing. So the company seems to be, having a lot of headwinds, right? Let's look at the long-term CAGR. So 10 years CAGR is 13%, nothing great. 5 year is also all single digits, nothing great. Profit growth is 16% over the last 10 years, fairly okay, but 5 years is nothing. 3 years and TTM, there seems to be some change in the profit growth. But the reason for that, as we saw, is because I think these low margin periods have reverted back to the normal margin. That is what has led to the jump in the profit growth, even though the top line has been quite muted. The stock price CAGR over the last 5, 3, and 1 year is pretty bad. The ROE numbers are fairly good. I think better than Apollo Hospital that we saw earlier. This company at least has a long-term ROE of 21. So in spite of bad environment, the company is still enjoying a 20% ROE. That's something that you will have to note. We move to the balance sheet. Then the thing that we want to focus on, like I said, is the size of the balance sheet. So balance sheet itself has grown about 10 times in the last 10 years, right? The balance sheet size is about 3,600 crores. If you see in the last 2 3 years, the balance sheet has grown fairly considerably from 2,500 crores to 3,600 crores. So about 40% growth in the last 2 to 3 years. So even though the top line itself has not grown, the capacity seems to have grown. So we can figure that out by looking at the fixed assets. So fixed assets have doubled, as you can see, about 273 to 564, which means that Avanti Feeds has utilized this downtime to build up capacities. So if the cycle turns, or if the next wave of demand comes, then the company is very well placed to probably cater to that demand. That is what these numbers tell me. Of course, I have not got into the details of what's happening to this company recently, right? But purely looking at the numbers, you can say that the capacities have seem to have gone up, right? Then what do? We come into we missed the borrowings. Obviously, the borrowings are nothing. It's almost practically a debt-free company. Compared to 2,700 crores of reserves and equity capital, just 15 crores of debt, and that too, I think long-term borrowings are just about 10 crores, right? So completely ignorable, right? Next, let's get into the cash flows. If I see the cash flow trend, barring 1 year, positive cash flows in most of the years. The check that we have to do is to look at the 584 versus go into the PAT number here, 557 plus depreciation of 60. So about 610 crores is what it should have been. It's about 584 crores, very much comparable. Doesn't seem to be an issue. It is able to convert its profits into cash flow. Let's look at if there are receivables. Hardly anything. I think the company gets paid on time. That there are no major problems here, so to speak, right? So it seems to be a fairly high quality company which is going through a rough patch right now. Let's come down to the ratios and look at this. Okay, so I think this was when the company was doing well. The ROCs were super high with 50 to 60% ROCs, but off late, I think the number has trended down as the business itself is struggling, but still decent numbers. I think 20-24% ROC is fairly good. Let's look at what the promoters have done. The promoter share seems to be fairly steady. Nothing much seems to have changed. FIIs have seriously cut down their positions, right? Of course, because of maybe the business performance. Okay, I think this is Thai Union, so I think there is some reclassification here. It's not really that I think part of it has gone into public, if I remember it correctly. Yeah, so if you can see it here, so I don't think the FIs have really cut any positions here. This Thai Union is one of their partners, strategic partners, who have also taken a stake in this company. Pine Bridge is no longer there. Mutual funds, I think just Bandhan I can see, but not many other mutual funds have any meaningful position here. Government of Andhra Pradesh has a bit of a stake, and in the public, other than Thai Union, there are no other major investors that I can see. One final check that I do here is the pledge, 0% pledge. Again, no issues here. The company seems to be fairly clean. The only issue seems to be the growth rate, which is in low single digits right now, right? So let's look at what's happening now in the. So we've studied the past. Let's go into the present, look at the quarterly numbers, open up the growth rates. Again, fairly muted growth rates, single digit growth rates. The number is seemed to be an all-time high revenue as well as all-time high operating profits, which means that the company is steadily growing. It is not growing fast, but it is still directionally it is doing all the right things, and it is kind of going up, right? So you look at that seems to be fine, and then you would look at the tax rate, which seems to be fairly okay, 25%, and then you look at the valuation, right? So it's done about 13%. Is there any seasonality, something that you would check there? It does look like June is one of the better quarters. Like if you see consistently, June is bigger than the other three quarters, which are more or less equal. So I think it's done about 13 in June. So let's say it does about 50 rupees EPS for the year. So what is it trading at? It's trading at about 643. So just about 10 12%, 12 PE, which is fairly, I think the valuations are not very high. But I think the reason for that is that the business also is not really going anywhere. So as soon as the business picks up, I think this company may have a lot of triggers from what I can see studying these numbers, right? Quickly, let's go into the future, right? So let's look at the documents. Let's look at the notes. Like I said, quickly we want to look at, is there any guidance? Typically, the guidance will be towards the end. Yeah, so it's your FY26 feed sales expected to be similar to FY25, which means again the company is saying no growth is expected. Processing division expects 17,000 million tons exports. So I need the comparable number for this, which I'll have to go and find out. Management expects to maintain profitability in Q1 FY26. I think this is an old con call. This is the Q4 con call. But I think they expected to maintain profitability, which I think they have done. The pet care business is a new business, so it's pretty meaningless right now. So overall, I think this is the key guidance, right? That the top management is not expecting much top line growth in FY26, and the reason for that, obviously, is I think the uncertainty of the tariffs, right? Because these shrimp players are one of the worst affected by the tariffs that the US has put, right? So I think any resolution on the tariffs should, these kind of companies should be the biggest winners in the short term at least, right? So again, none of this is a recommendation. I'm just discussing it, contextually, right? So future, so you can, like I said, go through the transcript also and study what the management is talking about, right? So what Mr. Ramchandra Rao is talking about, what this Ms. Shanti Latha is talking about. Just focus on what the management is saying. If you have time, then go to the analysts Q&A also to better understand the business, right? So yeah, so I think we've covered two companies, Apollo Hospital and Avanti Feeds. So this is how you do a quick analysis of any stock that comes on your radar. So you want to look at it from a holistic point of view. You want to look at all the different angles, right? P&L, balance sheet, cash flow, growth rates, how the shareholding is, what are the recent triggers. So you want to look at it holistically, but you want to do it very quickly so that you get a sense of, is this a business that I want to go deeper on? Now, the answer to that question really depends upon your own strategy, right? Like I said, for a value investor, something like an Avanti Feeds may look very, promising because the business is going through a downturn. All the other parameters seem pristine. The moment the business turns, right, the valuation can expand, right? But at the same time, something like an Apollo Hospital might be a completely a no-go for a value investor because the valuations are very high. But it at the same time it may not interest a high growth investor also because the growth rates are about 15% CAGR. So this kind of an analysis allows you to quickly size up the business. That is what the goal of this video was, to kind of give you a framework, in terms of how exactly can you, in about 10-15 minutes come up to speed on a business. So I hope this has been helpful to you. What I'll additionally do is